Why is the price of Bitcoin and cryptocurrency crashing? As I write this article, the price of Bitcoin and other cryptocurrencies are crashing. The big sell-off is happening as we speak, and there are a number of things that have caused this. The biggest impact has been the announcement by the Indian government that they are making cryptocurrency illegal. India is one of the largest holders of BTC, and those with a Bitcoin wallet is in danger of having the account closed. Why India banning cryptocurrency is a crazy decision. If you have ever visited India, you will see a country that is hugely underdeveloped. The gap between the rich and poor is one of the most extreme on the planet. One of the main reasons for this is corruption at the highest levels, along with making crazy political choices. The country is spending billions on a space problem, when a very large percentage do not even have access to the internet. The speed of the internet in most places is so slow that it takes 3 days to download on a half-hour TV show. This is putting the country at a huge disadvantage, and when you consider how many Indians are employed in IT, it shows what a ridiculous policy choice. Recently, the government made a huge error that ended up costing the country billions. They decided to ban their old currency notes, to try to end the massive money laundering that takes part. One of the reasons why there is so much money laundering that takes place is due to the huge taxes Indians have to pay to bring their money back into the country. If they eliminated this, they would eliminate the black market, but instead, they choose the wrong option, which greatly backfired. They have not learned from their mistakes by banning cryptocurrency, as this will also greatly impact the country on many levels. They will make a vast number of Indians who own cryptocurrency lose lots of their money, which will impact the economy. If they had followed Japan's lead and made Bitcoin legal tender, then they too would have seen an increase in around 2% GDP, but instead, it will have a negative impact. India also has a major problem with its citizens being able to get bank accounts, and many are unbankable. Bitcoin wallets were the perfect solution for anyone. With one click could download a BTC wallet and get instant access to sending along with receiving money in the form of crypto. Conclusion: India had the potential to be a world leader in cryptocurrency, and they could have even produced their own, which provided each citizen with a living wage. By doing that, they would help to end the slums found all the major cities in India. No doubt they will continue to make the complete opposite decision to what is required to keep the country in the dark ages instead of at the forefront of innovation. Major U.S. investment firms losing faith in cryptocurrency? For a lot of 2017, there was a lot of skepticism about the potential future of Bitcoin and other digital currencies. There were many well-known personalities in the investor space, such as Charlie Munger and Jamie Dimon, CEO of JP Morgan, saying that Bitcoin was a bubble and it wouldn't last. There was a shift seen in the closing months of 2017 of Bitcoin and blockchain technology becoming more widely accepted, with the launch of Bitcoin futures and the likes of Dimon backtracking on his previous condemnation of Bitcoin. Many large venture capital funds and investment institutions began to invest more and more into blockchain technology companies. Even governments have been getting on board, with crypto-friendly regulations being drawn up by the likes of Switzerland and a number of countries, either launching or in the planning phase of having their own national digital currency. However, with some significant dips in the crypto market since the turn of the year, there has been growing unease on a number of fronts. While many people are seeing these dips as chances to add to their positions by buying different cryptocurrencies at a discount, others have turned skeptical and are starting to liquidate their holdings and getting out of the sector entirely. Financial firms concerned about the risk of cryptocurrencies. The giant of investment banking Goldman Sachs has said in a filing that was released on February 26, 2018, that they now see their connection with blockchain and cryptocurrencies as being a potential business risk. This came just a week after Bank of America discussed the compliance and competitive risk that this technology was causing and would continue to inflict in the future. Goldman believes that they may be exposed as a result of the investments they have made on behalf of their clients, allowing them access to the Bitcoin futures market, as well as their investments in blockchain companies such as payments company Circle, who have just acquired a significant crypto exchange called Poloniex. As they believe these risks to be substantial, Goldman has been avoiding getting more heavily involved in the crypto market. It was in January that the CEO Lloyd Blankfein said that they would not be launching a trading desk dedicated to Bitcoin. Invest in crypto only if you can stomach potentially complete losses. To further add to the unease that investors are feeling both in the United States and across the world have been having, the worldwide investment management company BlackRock has publicized some of their bearish thoughts. While they're optimistic that blockchain technology is here to stay in the long run and they see the potential benefits associated with cryptocurrencies, they're of the belief that many significant obstacles are standing in their way. They have warned investors only to get involved in this sector if they can stomach potentially complete losses. BlackRock is avoiding having blockchain-related companies included in their mainstream investment portfolios as these investments are too risky, volatile and unregulated at this moment in time. They are adamant in their belief that there is massive potential associated with blockchain technology, but the adoption of it wouldn't be straightforward and would need close communication with central bankers and regulators. It is clear that institutional investors are going to remain very cautious about this sector for the time being, and they would rather sit back and watch how the industry develops before getting heavily involved. Bitcoin warning: Boss says Bitcoin attracts fools as he warns regulation is imminent. Bitcoin is not efficient and does not do what it is supposed to do, Bank of England boss Mark Carney has said following a speech in which he called for a crackdown on cryptocurrencies after branding them a failure. Mark Carney said cryptocurrencies such as Bitcoin were a failure during a speech at the inaugural Scottish Economics Conference on Friday. Following the speech, Mr. Carney told Bloomberg News, "It's 10 times more volatile than sterling. It's not a staple hold of value." He added, "It's not that efficient. For example, it costs about 1.5 pence to use cash, 8 pence to use a debit card in the UK, swipe cards, your iPhone. It costs about £2 to use Bitcoin on a transaction basis. You layer on top of that the environmental costs and other factors. It's just not that good at doing what it is supposed to do." But he said cryptocurrencies are the future of money. He added, "There's a glass half empty. We are not worried about displacing sterling, the US dollar or other conventional currencies. But these cryptocurrencies do throw a challenge to central banks and those who have received payment systems and markets of how to reorganize those to better serve customers." In his speech on the future of Bitcoin, Mr. Carney said, "The time has come to hold the crypto asset ecosystem to the same standards as the rest of the financial system." The Bank of England governor said it is a privilege to be part of the financial system and responsibilities come with those privileges. Mr. Carney added, "The best of the cryptocurrencies, I would suggest, will gravitate to the best of the exchanges if they were regulated. And others will fall by the wayside. In the end, it is not just about market regulation, part of this is about any money laundering, terrorism financing, other illicit activities." During the speech, Mr. Carney said cryptocurrencies attract fools. He said, "The prices of many cryptocurrencies have exhibited the classic hallmarks of bubbles, including new paradigm justifications, broadening retail enthusiasm, and extrapolative price expectations reliant in part on finding the greater fool." At present, crypto assets raise a host of issues around consumer and investor protection, market integrity, money laundering, terrorism financing, tax evasion, and the circumvention of capital controls and international sanctions. Bitcoin's value continues has spiraled over the past year. It reached its highest price in December at nearly $20,000 before taking a plunge in January. Bitcoin price increased to $10,930.92 at 12:26 GMT on Friday, according to CoinDesk. Bitcoin is a cryptocurrency not controlled by a single administrator and can be used to buy things worldwide electronically.
Cryptocurrency News Channel. Your new future. Thank you. Follow us on YouTube.